Hello, hello, hello. Happy Wednesday. Happy Fed Day for those who celebrate. How is everyone doing this morning? Good morning, John. Good morning, Jacob. Good morning, Patrick. Good morning, Jake. Good morning, Tony. Good morning, Royal Palms. Good. Hello, Daniel. Hey, Harold. Good morning. Glad to be here. Need more people like your group. Well, I'm glad you're here, Harold. Thank you for tuning in. Thank you, everybody in the background. People still filtering in. Hello, Charles. I know it's early out here, 6:04 a.m., but we're up and at 'em, ready to tackle the Fed Day. Good morning, PMG. So, we still have the big double tops in play. We still have the mini double bottom, even though we pulled back a little farther than expected yesterday. Well, a little farther than I expected yesterday. We still have the did not invalidate the pattern going into the Fed day. So, will we break up and complete the little mini doubles, or will we just invalidate them and head on down? Let's see. I mean, it's already that they're going to pause. Already that they're going to pause today. The markets baked that in. So it's just how many rate cuts they signal for this year. Is it going to be one or two? Doubt it's going to be three. Doubt it's going to be three. So we're just going to see. The market's still expecting. Well, let's see what the market is expecting right now. We just hit refresh. Going to refresh our Fed Watch page. See what the market's going to say. See, it's paused today at 99% certainty, pricing in a pause at 85% in May, and then a cut in June, a pause in July, a cut in September. So the market's currently pricing in two, according to the Fed Watch tool. Some other things also have them pricing in three. Now, before that, we don't have much going on. We had the mortgage information out this morning. We got crude numbers, EIA numbers for the crude traders. The interest rate decision, 2 p.m. Eastern. More important, everybody knows what that's going to be. It's the press conference. Press conference at 2:30. So that's going to be key. So don't fall asleep then. Don't fall asleep. Don't take your afternoon nap at 2:30 p.m. Eastern time. Hey, David, good morning. Good morning, McRangers. So that's what's key today. That's really what everything's going to be trading off. Going into it, we have a little slightly green. We have Intel down. We have Progressive down. But a lot of Tesla finally bouncing after getting routed again yesterday, forming a potential double bottom pattern, but may never trigger. By the way, the potential double bottoms, like in things like Meta and Amazon, are off the table after never triggering. They turned into triple bottoms. So also keep that in mind. For our groups this morning, we have consumer cyclical, technology, real estate, leading, and comm services. Really, the only thing that's minorly negative is consumer defensive. Then you got a bunch of really flat things, and then it's going up into the comm service, real estate, technology. So you have to see if that can boost it. We already looked at the Fed Watch. Just refresh this again, but I still think it's in extreme fear. Yep, we are still in extreme fear. Schiller PE ratio with the little drop yesterday, still though above 35. In terms of earnings today, we have Williams-Sonoma and General Mills coming out this morning, and after the close, we don't have much at all. Sterling is running late this morning, so maybe if Sterling has a chance. Thank you for tuning in. As always, I know it's your day off, Sterling, so you might have other things going on. Could you post Williams-Sonoma and General Mills in here? Curious where I see Tesla heading. I see it heading long-term below 100. Long-term below 100. But it can take a long time to get there. And in the middle of it, you're going to get insane rallies still. Okay, it's going to be really interesting to see where the quarterly delivery figures are for Tesla. And remember, tomorrow after close, we got Micron and FedEx and Nike. All right. So, thank you, Sterling. Again, if you don't have time, don't worry about it. You know, other things are more important. I was wondering if you could, because it's not easy for me to pull that up right now, though. Right now, this pullback, remember, the stop has not moved, and even if you did move the stop, again, 62.5 would be very key for me. Let me change the color of this. Did not get below that, but technically the rules are until you hit the first target, the stop does not move, and you see we had nowhere near invalidating it. Although we had the little bigger drop at 9 a.m. yesterday. You'll see that right here, slicing through 9 a.m. I was watching to see if I got any pattern around that 56.85 to 56.92 area. We did not. We burst through that to the downside and then bounced, and that 56.85 right here became key support. But this is now a valid 4-hour potential double bottom. Going to get interesting being a Fed day, though. So I'd want to see it follow through with a close above 56.89.50 to at least trigger. It hasn't even confirmed yet. Now, it could roll back down the open and be invalidated. But that would take it to yesterday's pre-morning sell-off area only. And then the targets are still the same from what we covered yesterday. Now, going into that, my key support level is between, even though we have not raised the stop technically on the double, my key support level, change the color on this one. My key support level is between 56.62 to 56.38, and I'm leaning closer to this 56.55 to 56.52, 56.62 on any pullback. That's what I'm looking for. Prior to, if we do sell off, if we do turn around, that's what I'm looking for prior to the Fed meeting. If we triggered a double, then 57.05, 50, 57.13, 50, 57.21, 50 to the upside. Overall, you can see here, it's a little hard to see, but we have the orange line because we have doubles within doubles. Remember, we did hit the second target on the double top, and we're getting a bounce, not unusual because very rarely do these go straight down. But pay attention, if we do continue up, I'm really going to be focused on this 57.95 to 5800 area, especially with the declining rotation zone coming in near there. I'm not looking even for the full target right now. NASDAQ, by the way, the NASDAQ does not, let me fix the chart, this did not pull back far enough to make a potential double bottom, so that cannot be traded that way. I'm watching about 19,805 area. If it breaks above there, it's into a single candle clear path move on the 4-hour, and on the 1 hour you have this clear path move, and the first target for that is about 19,928, and then the next target is right around 2024. So those are the two upside targets, and this is more turning into a horizontal channel with very key support right around back down around 19,960 on any pullback into the open. Below there, and this is key. Now, technically not raising the stop on this is nowhere near the first target, but on a 4-hour close below 19,653, going to be watching for it to probably fail the double and retest the low area. The Dow, nothing much, still rotating back down. There's no double bottom pattern here. Key level for me is it's got to get back above still about 42,180, and then the next target is around 42,400. Pullback area, I'm just would be using again your standard harmonics and really watching 41. Minor into the open would be 41,718, but if we got a bigger sell-off even after the Fed meeting, 41,550 is key on the Dow. Russell, remember the Russell did close below the bigger term 62.5, this purple line right here. So I'm really watching for rollover plays. If we did break out a rally with a dovish Fed though, 21.15 is very, very key resistance with the declining rotation zone. Again, if you're looking for something else prior to that, same difference, just put up your harmonics. Minor area on the pullback is about 2046, and major is 2036.9. That's the levels that I would be looking at. Let's see what else we have here. Where did my little chat go? There we go. Here we got General Mills. which was the beat miss. EPS $1 versus 96, and slight miss in revenue, which is a little concerning. GIS, we're gapping down. This is going to be a short-term invalidating of the inverse head and shoulders. Still interested in this from the longer term, though, especially if we come back down and retest this low area. Why am I interested in this one? For a reason close to it's going to be probably over a 4% dividend yield again, and the PE is reasonable. This is going to climb a bit, but it's still, that was the first breakout play I was watching, and now I'm still watching for this very key level to hold, this 55 level to hold. Needs then to form another buy setup. But this is interesting for me for a longer term perspective in a portfolio. So that's why I'm interested in that. Williams-Sonoma beat. There you go. Williams-Sonoma down 15% due to lackluster guidance, which is very interesting from the higher end, because the higher end consumer shops Williams-Sonoma. It was trading against its 200 area. Let me flip around these. It's trading against the 200 area, and on the longer term, we had this weekly double top. I just want to point out a couple things here that played out, and now it's continued lower. And critical is this 62.5 harmonic right around 161, and we're gapping below that. It's 160.95, I believe. Technically, it's 160.82. 160.82. So why I'm interested in that is it finished a double, returned to the rotation zone, rotating down, bounced the rotation zone ahead of earnings, and now looks like it's going to close below its 262.5, and there's still a massive gap left behind. So from a bearish perspective, we could eventually see this thing back to 137.16 area, which is also pretty much the gap fill. See here, so this is something else I'll be watching for, continued lower price action over the next few weeks to months. So I got sidetracked. We'll get into some other things in a bit. Let me just jump back to the VIX. Still watching. It's got to get below 20 to sustain a rally for me, to get into more sustainable rally mode. DAX still in very sloppy potential double top territory, but a long way off from triggering. So nothing to talk about there. Notes. By the way, if this does not trigger today, it will have moved too far. Let me point something else out. It will move too far to the right. We've talked about that rule with the count off. However, different than here. Why would this one, see, we got the same double bottom pattern going to the right. Why would this one not be invalidated? Now, if it drops back down today, it makes a triple bottom. It is, of course. This one has been confirmed but not triggered. So once it's confirmed, you can keep extending. So from a yield basis, that's where we sit. Because that one's confirmed. The notes have not confirmed. So this one could be invalidated if it does rally back up, or if it does not trigger today. Either of those two things would invalidate it. So that's the difference between those two patterns. Still watching to see if, with what J Powell says, unless he's incredibly dovish, going to be watching for this to potentially trigger today. Dollar index still has a mini potential double bottom against the rotation zone. Yesterday's little pullback did nothing to making slightly lower swing low, but did not do anything to invalidate it. So in the short term, I'm keeping an eye today, especially with the press conference, to see if we close above 103.38. Crude has confirmed again, not triggered. You see the power of the rotation zone. Again, all these spikes in the rotation zone, even slightly beyond it, are getting rejected. But this also is a pattern that's confirmed. So, did this invalidate on a pullback yet? Did this invalidate the double? No, it did not. It would have to trade back below 65.76 to invalidate the pattern. So that's still potentially in play going into the EIA numbers. But if we sell back down, it will be off the table with never being triggered. Gold continues its march higher, getting very overbought, very overextended on the daily, but would just be moving up stops. And this one's 30.63's next target, then 30.86. Key support now coming in at 3,000. Very key support. What else? The yen starting to weaken again. I'm going to be watching to see how this falls through after the Fed press conference. Coming into a major declining trend line, though. Major declining trend line area. So, still, we're now overbought. We are at cycle's top, so I'm going to be watching for a rollover and see if we make a stronger bottom here, and then we start shifting the yen back to more of a weaker yen. But there's no long-term pattern yet. This is just still a corrective play based off of coming out here. It's going to also be interesting, though, to see where we close this week, because if we close above last week's high, it's a % beat buy on a weekly basis. Excuse me. Euro still has a potential double top in play against the 75% harmonic, so keeping an eye on that also. The spiders, we again had the double that has triggered. Yesterday's price action did not invalidate it. On any rollover play, I'm going to be watching for the gap fill. On any weakness to yesterday's close at 561.02. On any rally, we still have a gap fill. Before the double targets, we still have the gap fill to Monday's close of 567.15. And then, remember, I moved stop early 570. It was 570.02, but we got 569.71, close enough for me to at least move a stop because we're in a very weak market overall. So the invalidation point at this point for me is 557.19 on a closing basis. Or if we tank with the press conference, 554.69 invalidates the rest of the pattern. The Qs, again, did this pull back far enough to invalidate the pattern? No, it did not. It had to go close below 471.92 or trade below 470.09. It did not. So the pattern is still in play. This one was not close enough to raise a stop on. On a rollover play would be the gap fill yesterday, 474.54, but I'm keeping an eye on any rally at yesterday's open, 479.41, and then we still on a stronger rally, 482.77 to the gap fill to Monday before the next target of 488 roughly for the first target on the double, unless it's invalidated. All right. Bitcoin, not much to talk about. Still in just a congestion pattern. Tesla does have the potential mini. This is not the strongest pattern, and it's nowhere near triggering, but that's key above 251.84 for a bounce play only. Again, and that's nowhere near triggering. What can we look at? BAC. Sure we can. Bank of America at weekly cycle bottoms. Remember, Bank of America has triggered a double top and a bounce play. We could be a % beat buy, and I'd just be watching for a return to the area between 42.78 to 43.75 for a potential rollover play if that happens. All right. And I'd actually lower that out to about 42.50 because we have the declining rotation zone on the daily and the flat 200. So on any continued bounce, that's where I'd be watching for another rollover play if it does bounce. But longer term, the probabilities say we could still easily return to the weekly 200. And the weekly 200 was resistance becoming support. So that could be a very key support level longer term as the double continues to play out. So I would not be putting all my eggs from a bullish side in Bank of America. I'd be watching for a rollover play and then really focused on this 200 area longer term. AA. Let me take off this old stuff here. AA, Daniel says, is a double bottom. Yes, it is. Yes, it is. Not yet at the first target. 35.45 is the first target. And then you have 36.25 area and then about 37.05 to potentially take it back to the 200. So that is still a double that's in play. Confirmed back on Thursday, then triggered on Monday with the pullback play on a triggered thing on Tuesday. So that is a very proper pattern, Daniel. You spotted that correctly. Now, is that a long term, I'm going to get super bullish? No, because look at the weekly rotation zone. Coming back down, look at the weekly 50 EMA. That's a bounce play only, and I'd really be focused on only the first and the second targets since it is against the weekly rotation zone. Other stuff, we had the potential double on Meta, which yesterday invalidated it and came back down without ever triggering it. Close to that 200. I'm going to be watching and see if this area, if it comes up with another bottoming pattern, or if the 200 breaks. That's going to be very interesting. Now, very oversold with getting to the bottom, but the potential only bounce play is invalidated. And same with, what was the other one? Man, I just blanked out. Amazon. Amazon had the potential double bottom against the daily rotation zone, and yesterday turned it into a triple and invalidated it with ever confirming or triggering. So the couple little mini patterns I was keeping an eye on did not trigger and got invalidated. Now, a lot of these mega caps are getting very, very oversold. Does not mean they have to bounce just yet, but keeping an eye on them, keeping a strong eye, especially after the Fed press conference. Yes, see, I already talked about Tesla. There is the only bullish setup, and it's not close to triggering yet, is it needs a follow through to the close above 251.84 for a bounce play only. Remember, longer term, since we have close below 62.5, the longer term price magnet is still back to 182. And then longer beyond that, I'm still watching for rollover plays. But that's the only little bullish potential setup. Ahead of that, you still have your gap filled on Monday, back to 238.01, trading on a little gap up today, and really then pay attention to Monday's opening price if we get above there at 245. There you go. Thank you for tuning in, C-Bar 65. All right, let's just take a look at the open real quick, the S&P open. Again, not much to talk about right now. Remember, we still have the not confirmed or triggered little mini potential double bottom here. Not the best forming pattern, but again, that's the only, because we've already confirmed a little bullish bounce pattern on the daily. Going to watch to see if this triggers and we get some follow through to retest that trigger point. So, again, very key support just below this 56.62 area. Is FCX a daily double, or does the first dip count as a triple? That FCX. A daily double. FCX on the daily. This is not a daily double. Why? Because it's not reversing enough of a pattern. Let me show you here. You see this, the two bottoms. Here was the key area. It had to reverse, and all your targets would extend beyond this area. So no, that's not a double. Good morning, Heinrich. Thank you for tuning in. Thank you, Anissa. All right. With that, I shall talk to everyone later. Have a happy Fed day. See you all tomorrow. Bye for now.